Next week's economic announcements. Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of HeiseSays. Well, it's the 1st of March on a Sunday, and I thought we'd finish off this week by having a look at the economic announcements that are coming up next week, and just seeing what we should keep an eye on, or what I'm looking forward to seeing. Now, I'm at my favorite website for all of this news, Trading Economics, and I've got the calendar up here, and right now I'm looking at Australian and Chinese announcements because these are the two that I think affect Australia the most. Now, if you're wondering why I'm doing that, wondering why, I will bring up one of my favorite charts, chart websites, another one, the Observatory of Economic Complexity, and here it shows really the biggest destination for Australia's exports, biggest is China, and the biggest origin for Australia's exports is China as well. It might be worth looking at number 2 here, which is Japan, and then South Korea, India, and Hong Kong. But today we'll just look at China and Australia. We'll see how it goes. Now, let me know if this is a useful thing to do every week. Probably, a good way to finish the Sunday and to plan for what's happening next week. So on Monday, we have the AI Group Manufacturing Index, and I'll bring that up. Now this is a PMI, Performance of Manufacturing Index. So previously it dropped to 45.4 in January from 48.3. Now with these PMIs, if it's above 50, there's generally greater positivity. There's more positive than the previous month. If it's below, it's worse than the previous month. So several measures below 50 show it's getting worse again and again and again. Okay. And we'll scroll down here. It measures the performance of the manufacturing sector and is derived from a survey of 200 industrial companies. 200 industrial companies we can see. So they don't have a consensus there or an actual, but we'll have to look at that. Do they have often? Because what's interesting is to see what people think it is or what they predict it will be, and what actually is. So I think I'll go through that one. I don't know if it'll. I'd say it's going to be pretty bad. I'd be shocked if it wasn't. Then we have the Commonwealth Bank Manufacturing PMI, the final, in February as well. Now, the previous month it was 49.6, and they expect it to be 49.8, and this is released at 8 a.m. on Monday. So it's the industrial sentiment across Australia remained unchanged. And we'll scroll down here to get the description. The Commonwealth Bank Manufacturing PMI is based on data compiled from monthly replies to questionnaires sent to a representative panel of purchasing executives in over 400 private sector manufacturing firms in Australia. The panel is stratified by GDP, company workforce size. The manufacturing sector is divided into the following 9 broad categories: food and drink, textile and clothing, wood and paper, chemicals, and others. So this will certainly be a good PMI to compare to the other one, just so we get an understanding of where the manufacturing sector is sitting in Australia. Then we have the TD-MI inflation gauge, month on month. The ANZ Job Advertisements. Now, I've got that one here. The last time we looked at it was on this. The job ads were down again, and you can see here, wasn't too good, the 20th week that it went in, or 20th month. And I will have a look. The February data. So that's one I'm looking forward to see. I could say it kind of went up a little bit in January from that month. So what is interesting is the difference. So it was forecast last time at 2.3. Consensus was at 3.7, but it went up to 3.8 in January. So this is one I will want to keep an eye on. And how it works is, where's the description? In Australia, job advertisements means the measure of the number of jobs advertised in the major daily newspapers and internet sites covering capital cities. So yes, this is definitely one that I'm interested in seeing how the job advertisements have gone, particularly for the construction industry. So that's one I will be keeping an eye on. So there's 3 here I really want to have a look at. I might combine these two on an episode. So we've got business inventories as well coming out on Monday. And now, Australian business inventory declined 0.4%. And we'll have a look here. There you go. 2 reports of it going down. And we'll jump here to the description. Business inventories in Australia measures the quarterly percentage change in inventories from manufacturers, retailers, and wholesalers. Inventories are a key component of GDP, gross domestic product. Now, here's the thing to keep in mind. How much is Australia importing? Are we going to be burning through our inventories? What's going to happen when some of these businesses... I think someone mentioned in a comment that he installs lifts, and all the lifts they install are imported from China. So this is another interesting one to... Monday is going to be an interesting day with what's happening in the market and what's coming out in Australia. Got gross company profits quarter on quarter. So corporate profits in Australia unexpectedly fell by 0.8% quarter on quarter to AUD, Australian dollar 97.46 billion in the third quarter of 2019. So we can see here it was climbing, went down. So it'll be interesting to see what's the description. In Australia, corporate profits refers to the net operating profit or loss before income tax and extraordinary items, and is net of capital profits or losses arising from the sale of businesses, owners' capital goods, and dividends received. So we'll have to see, because this will also be just an indicator of where the economy is heading. So we've got a few things here to have a look at. And then we've got the, how do you pronounce that? Caixin manufacturing PMI from China. So the manufacturing PMI in China decreased to 35.7 in February from 51.0 points in January. So is this updated? Well, we'll have to see. Maybe that's the official release. I thought we'd already gotten it. So we'll have to see if more data comes out or if it's officially received at that time. But I'm assuming it's this one here, 35.7. If it would have to be. I mean, that shows you how the great difference between that and the consensus. And then on Tuesday, we have HIA new home sales month on month. And they rose 2% from a month earlier in December, rebounding from a 4.4% fall in the previous month. So if we have a look here, what is it? The consensus previous was 2, and the TE forecast is negative 3.1. So they were way off from last time. We'll have to see what happens. And what's the description of it here? In Australia, new home sales are based on the survey results obtained from statewide estimates using weights based on financial year market sales of private dwelling commencements. Then we have building permits month on month in January. Now, this is one I definitely want to keep my eye on, because we can see here there was a jump, but they declined. So a very slight growth that we looked at that. Number of dwellings approved in Australia declined by 0.2% month on month in December, following a downwardly revised 10.9% in the previous month. There you go. So we had an increase, but it was revised down because the data often will update over time. So this is one I'm interested in keeping an eye on. You can see here I've got it up. We can see here. And what is building permits? In Australia, building permits shows the monthly change in the number of total dwelling units approved, including building activity carried out on existing buildings. So this is an important measure, particularly for the construction industry, to keep an eye on, because it'll, the number of approvals will tell you what's happening with what work is coming up. And then we have, on Tuesday, we have the current account for quarter 4. So, and we'll have a look here. I mean, there we go, we're climbing up. We'll go down into the description. Current account is the sum of the balance of trade, exports minus imports of goods and services, net factor income, such as interest and dividends, and net transfer payments, such as foreign aid. So, Australia's current account surplus widened sharply to AUD 7.86 billion in the third quarter of 2019 from a downwardly revised AUD 4.67 billion in the previous quarter, and beating market expectations of a 6.3 billion surplus. So that's one I'm not as excited to see. I'm definitely interested in these two on Tuesday, the new home sales and building permits, but most definitely in the RBA rate cut decision. So right now the cash rate is at insanely low levels, and they've kept it on hold at 0.75, and we'll have to see what comes to what the announcement is. Now, from the ASX, you can see, and I will bring this up here on their website, they have a method, well, statistics showing the rate percentage. I'm just bringing that up here. So this is the RBA rate indicator of March 2020, and here in February 27th, 89% of no change, decreased to 0.5, 11% chance. This, and I'll let you read through the methodology here that they used to determine this, but it's interesting just to keep an eye on it and to see, because right now the consensus and forecast is it to remain the same. You think it will? Looks like everyone's saying it will. We really need a bigger shock. Maybe it'll be next month. So that's Tuesday. And then we get to Wednesday. Wednesday's a big day. We've got the AI Group Construction Index. And this is, the performance of construction index. And in January it rose 41.3, up from 38.9. We can see it here. And this is, in Australia, the performance of construction index is a composite indicator designed to provide an overall view of activity in the construction sector. The PCI is a composite index based on the diffusion indexes for the following 5 indicators: sales, new orders, employment, deliveries, and prices. A reading above 50 is positive or expansionary, and below 50 is pessimistic. So, well, not pessimistic, what do they say? Contractory. So you can see for a long time, for this entire chart, it's been in contraction, guys. We'll go to 1 year. It's been in contraction 5 years. So it's been performing worse month on month since about here for months. Why is it saying 5? Oh, 5 years all the way here. So things have been getting bad for a while, guys. It's probably aligns with what a lot of people are saying and what else we've been reading in the news. This is one I will definitely be looking at because I think the building permits will feed into this, guys. So we've got the CommBank Services PMI Final and the CommBank Composite PMI Final as well. And these are our service industries. It's another PMI. Under 50 is contracting or pessimistic. Above is more beneficial or more positive. The CommBank Services PMI is based on data compiled from monthly replies to questionnaires sent to a representative panel of purchasing executives in over 400 private service sector firms in Australia. The panel is stratified by GDP, yada yada yada, and it's transport and storage, consumer services, information and communication, finance and insurance, and real estate and business services. And we have here the composite PMI, and where are we sitting at? Again, we're below 50. All of these are below 50, so nothing's screaming economic powerhouse, is it? In Australia, the Commonwealth Bank of Australia Composite PMI Output Index is a GDP-weighted average of the Commonwealth Bank Manufacturing Output Index and the Commonwealth Bank Services Business Activity Index. It tracks changes in business activity in the Australian private sector economy as a whole. A reading above 50 indicates expansion in business activity, while a reading below 50 points to a contraction. Well, let's have a look at the monthly data. We were slight expansion in January, but most of them are below. So no, there are a few here above, but below. So this is definitely going to be one to have a look at as well, guys. And the big one, the big mama on Wednesday will be the release of the GDP growth rate data. We've got quarter on quarter and year on year. And I mean, I don't need to explain it to you. Well, maybe we should. Australia's economy is dominated by the service sector, 65% of total GDP. Yet its economic success in recent years has been based on mining, 13.5% of GDP, agriculture, 2% of GDP. As the country is a major exporter of commodities. Other sectors include manufacturing, 11%, and construction, 9.5%. Okay, so the forecast or the consensus is for 2% year-on-year growth, and the trading economics forecast is 1.9, while economists that I've been reading in the paper seem to think it's going to sit at 1.7. And then here we have the annual seasonally adjusted 0.4. This is just the monthly or quarter-on-quarter GDP data to see how we're going from one quarter to a quarter, and everyone's thinking we'll be at 0.4. So that will be interesting to see. I'm definitely looking forward to seeing that data, guys. What do you think will happen? Then we've got the RBA chart pack. That's just more information from them about the cash rate. We've got the GDP Final Consumption quarter on quarter, GDP Deflator quarter on quarter, and GDP Capital Expenditure quarter on quarter. So consumer spending in Australia, and we'll go down here. Household final consumption expenditure is the net expenditure on goods and services by persons and expenditure by private non-profit institutions serving households. These items include personal expenditure on motor vehicles and other durable goods, the imputed rent of owner-occupied dwellings, the value of backyard production, including food production and consumption on farms, and the payment of wages and salary in kind. So this will be an interesting one just to see how that part of the sector is going. The GDP deflator, have a look here. In Australia, implicit price deflator, IPD, is obtained by dividing a current price value by its real counterpart, the chain volume measure. When calculated from the major national accounting aggregates, such as gross domestic product, IPDs relate to a broader range of goods and services in the economy than that represented by any of the individual price index published by the ABS. Movements in an implicit price deflector reflect both changes in price and changes in the composition of the aggregate for which the deflator is calculated. So I can't say I have been following this measure very much, but it might be worth looking into. I'm sure it definitely would be, to see how things are heading. Then we've got the GDP gross fixed capital formation, which is heading down. We'll have a look here. Gross fixed capital formation is equal to the total value of producers' acquisitions less disposals of fixed assets plus capital works done on an own account during the accounting period, plus certain additions to the value of non-produced assets realized by the productive activity of institutional units. I will need to look at this one a bit greater, because I haven't really been following it, to be honest. I think it's trending down, guys, so it's not looking good. It's not looking good. Then we have the Xianen services and the composite PMI, which I thought have already been released. Okay, maybe not. We'll have to see. Then on Thursday we have the balance of trade and exports month on month and imports month on month. So balance of trade. What do we have here? We'll have a look at the description of it. In 2017-2018, Australian recorded trade surpluses, mostly due to rise in resource exports like natural gas, metal ores and minerals, coal, coke and briquettes, and rural goods such as meat and cereals. The biggest trade surpluses are recorded with China, Hong Kong, Japan, New Zealand, the biggest trade deficits with the United States, Singapore, South Korea, Malaysia, and Thailand. So it'll be interesting to see where we're sitting with that. And we'll look at our exports. This is the Australian exports. We can see here, rich in natural resources, Australia is a major exporter, just to see what how our exports are doing. I think this is one I'm definitely looking forward to, particularly with my constant rambling on about Australia's primitive economy and how we're so dependent on exports. And then our imports. Now, we'll have a look here. Australia imports mainly machinery and transport equipment, 40% of totals, of which road vehicles account for 12%, industrial machinery for 6%, electrical machinery for 5%, and telecommunications and sound recording for 5%. The country also imports petroleum, manufactured goods, chemicals and related products, food and live animals. Main import partners are China, US, Japan, South Korea, Thailand, Germany and Malaysia. So this is one I definitely will be looking at. So then on Friday, with the AI Group Services Index and the Retail Sales month-on-month Index. Now the AI Group Services Index, what we have here, this is the Australian Industry Group Australian Performance of Services Index, is the leading indicator of services activity in the Australian economy. The Australian PSI is a seasonally adjusted national composite index based on the diffused indices for sales, orders new business, deliveries, inventories, and employment with varying weights. And once again, they're looking at 200 companies, and below 50 is contracting, and the last 2 surveys have been contracting. Then we have retail sales month on month, and just look at that dive there in retail sales. And what we have here is, in Australia, retail sales report provides an aggregate measure of sales of retail goods and services over a specific time period. In Australia, retail sales are seasonal, volatile, and relatively important to the overall economy. Well, yes, it certainly is, particularly with the retail recession that we've been looking at over and over again. So this is some data that I'm definitely going to keep an eye out. And what's the forecast is -2, consensus is 0. Previously it was -0.5. So that's all of the Australia data that's coming out next week. We also have some data for China out on Saturday, their balance of trade. And that's going to be interesting. Look at that drop. Their exports, look at that drop. Consensus is at 8.4. We'll have to see what that is. The imports at -9. I mean, the fact that their exports have tanked and their imports are tanking as well, it's going to have huge impacts. And then their foreign exchange reserves. And we'll just have a look to get a bit more of what that is. Scroll down here. In China, foreign exchange reserves are the foreign assets held or controlled by the country, central bank, by the country and central bank. The reserves are made of gold or a specific currency. They can also be special drawing rights and marketable securities denominated in foreign currencies like treasury bills, government bonds, corporate bonds, and equities and foreign currency loans. So that's growing. Is it growing? We'll have to see. So guys, there we have the data that is being released next week. So definitely some interesting economic information coming out. I will be producing content to share this information with you when it all comes out. Looking forward to seeing what the job figures are, the job advertising in particular, building permits, the GDP rates, the growth rates, and then our retail sales and China's exports and imports. They're the ones I'm really looking forward to seeing. We'll have to wait and see. What do you think, guys? Do you think our GDP will cop a beating, or do you think it'll be okay and it will be next quarter that we see it? Do you think the RBA will cut rates, or do you think they'll hold on to them? Let me know your thoughts and opinions in the comments below. Thank you all for watching. Let me know if doing these type of videos to round out the week, if it's something that you enjoy and you want me to keep doing, because it's a little different. It's good for me as well, just to get I'm doing it anyway, but to get an understanding of what's coming out next week and to share with people. Take care, everyone. Thanks for watching. And if you want to support us a little bit extra, there are a few ways you can. Share the videos on social media, LinkedIn, get them out there, get your colleagues talking about them. We all need to get a bit of a better understanding of what's happening in the economy, particularly when we want to discuss what's happening in the news or our political leaders. You can support us as well by joining the channel on Patreon with a small monthly donation. You can also join the channel here on YouTube, similar to Patreon, Australian currency, and you get access to badges and emojis. We also have affiliate links with Amazon and eBay for your consumer purchases, and independent reserve and Kucoin for all the crypto traders out there. We have access to pocket squares, handmade. You can see one right behind me there, hanging up. Check it out on the HeiseSays website. And finally, PayPal if you want to contribute that way. Thank you, everyone, for helping support the channel. Take care, and I will see you next week. Bye for now.